The stock market's losing. I didn't have any choice, Charles. I moved all my money over to the G fund or bonds. I've heard this before, going back just to COVID or to the financial crisis, 12 years prior to that. There was a lot of that happened. Does that make sense when the stock market is falling? Should you be making any moves? Well, typically, when you react emotionally to stock market losses, most investors end up losing money. Now, if you're within 3 to 5 years of retirement, I understand why you're so concerned, and you might be transitioning your 401k, your TSP, your IRAs over to safer, quote unquote, areas away from direct stock market loss. But is there anything you can do to take advantage of a market that's falling when the stocks are losing? Well, sure, there's one idea for a certainty. Let me illustrate it this way. When you go to Macy's, if Macy's, makes it through this, or you go shopping, do you like to go when there's a 35% off sale, or do you like to buy list? I think you like to go when there's a sale. And how about when you come to the register? That's why I mentioned Macy's. And they have an extra 10% off that they just have at the register that they use to discount even more. Don't you just love that? Well, when the stock market's losing, guess what could be happening for you? If you're funding your 401k every 2 weeks, what you could be doing is putting money away into stock positions as they're falling. So what you're doing is buying on sale. And then when they rise up again, you've been dollar cost averaging the entire time. That's a great way to put your money to work. Now, every year, maybe every 6 months, you may want to rebalance, and you may want to go towards a more conservative portfolio. But at least along the way, you've been buying the dips gradually every 2 weeks, twice a month in your paycheck. And so in that way, you win because you can buy on discount. Now, if you're 5 to 7 years away from retirement, you may not really have too much concern about what the stock market is doing to your retirement portfolio. But as you get closer in, especially if you're going to need that money for income, then it might be a good idea to have a plan, talk to somebody, and figure out what your strategy should be and what your balance should be, what your mix might want to be if you're going to need to create income in a few short years. But when it comes to buying every 2 weeks, it may be a really strong idea, especially in a stock market downturn, to continue to buy lots of stock positions, but not for your balance. That's a completely different subject we can tackle on another occasion, another conversation. Okay, thanks.